concepts, because with trading concepts, there's never going to be one that is like the holy grail that really adds a lot of improvement in your systems,
Yeah.
because the probability of the trade, regardless if you know GAN or Elliott wave or RSI, MACD, whatever it is, that next trade that you put on is the same probability as if you didn't know those things, right? So if I go out and learn Elliott wave, which I don't, tomorrow if I take a long position in NQ, it doesn't change the probability of that trade, right? So the biggest edge that I got as I grew as a trader was just finding things that resonated with me, sticking with them, because uh, a lot of traders get bored of a specific system and they want to find something new because that's exciting and it gets your dopamine going because there's curiosity around it. But yeah, the biggest thing for me was just being okay with what I've learned already. I didn't need to learn more about the market. I just needed to refine my systems. And when it came to refining my systems, the biggest edge again was trade management and risk management. So I had a really good system. But when I started focusing more on trade management, risk management, and emotional control, those three things carried my trading so much farther than all the years prior trying to add new systems and new concepts and new strategies.
I think it's a very powerful sentiment in terms of like, I think a lot of people out there would improve their trading by focusing on that side of things, like the risk management and their trade management and their emotional control versus finding a new
Yeah.
system or finding something new that they can improve on and add in. But just to go back to what you said there, what you're doing right now in terms of learning is learning more about yourself. Like, what does that look like? If there's any insights you can share there.
Really, it's just I'm like an addict for trading material. So I'll read all the new books that come out, and it's really just getting different perspectives. Essentially, when you're learning and you're growing and improving in life in general, it's just about getting different perspectives that help you think as an independent thinker. And I think that's something that a lot of people possibly lack, and especially nowadays because the short form content is so rampant that people, their attention spans are so short that they can't really learn anything properly over a long period of time. And I think reading is probably the one thing where if you can sit down and read a book for a couple hours, you're probably way far ahead of most of the population on the earth. Is because you can't if somebody's really addicted to short form content, you try and sit them down
Yeah.
and read a book for an hour, they can't sit there for an hour without picking up their phone.
Yeah.
Right. So it's very difficult. And I think nowadays, and that's probably the biggest struggle nowadays, is that there's so much information, so much short form information that people can't retain it all. It's very hard to retain information. And I think at least spending an hour a day reading definitely improves my focus. It improves my thought processes and the ability to, think about how I'm going to grow and improve as a person.
I think it incentivizes deep thinking as well. Because one thing I was just reflecting on when you said that is these short form content, sort of addicts, and just generally, people who are really kind of on their phones a lot, including myself, is it can create a very chaotic mind, like a very racing mind, which when if you bring that to trading, all these 1 minute candles, 5 minute candles, or these spikes, especially with the volatility we're seeing, imagine what your mind's going to be like when that's what your mind is pretty much all the time outside of the charts. And you probably got your phone out as well, compared to if you've meditation, things that allow for deep thinking, things that slow down that pace. Don't get me wrong, as a scalper, thinking fast is important, but there's a difference between chaos and thinking fast. Like something intentional versus.
That's why I think a lot of traders that are scalping, they just can't make a really good decision in that short amount of time. Because they don't have the ability to actually critically process what's going on in the markets. They're just acting off of emotion a lot of the time. And I think meditation for me was a big pillar in my growth as well, because I always looked at meditation and I was like, that doesn't work until I actually tried it and realized like my thoughts were racing so badly that I couldn't sit still for even a couple minutes. When you close your eyes, again, it feels like an eternity that you're trying to focus on meditating. But when you open your eyes and look at the clock, you're like, man, I still have 15 minutes to go for this session. And to me, it's very important. You have to be able to, and that's, again, part of like the morning routine is just being able to sit down, run through my processes, at least meditate for 10 to 15 minutes and visualize how I'm going to execute in the market. So when I visualize everything that I'm going to do, then nothing becomes a mystery to me. Nothing really blindsides me. Right.
The beauty with meditation, the interesting thing is it's probably one of the few things where you literally get direct results. Does that make sense? Even the first time you do it, yes, you might struggle, like you said, like you might just do 2 minutes. But even that 2 minutes, you'll see results.
Yeah,
from it.
you
Like,
get mental
will be more-
clarity.
yeah, you'll be more calm. You'll feel that calmness. It might not last long,
Hmm.
right? Especially the first time you do it, but you will feel it instantly. And the more you practice it, and it's just like anything else, the more you build that muscle, the more you build up those reps, suddenly you'll be doing 15 minutes or maybe 30 minutes, but then you'll really feel a difference. I love that. One thing you mentioned about process, like what does that look like? What is it that you're actually looking at when it comes to, reviewing your process every morning? Like what are those things? Is it a checklist? Is it a particular routine? Is it
Yeah.
like particular things in the market?
So it really is just a checklist. A lot of the times, and I started doing this a couple years ago, was I'd make sure I do a nighttime prep routine. Like I'd sit down, review all the daily charts, and I run through a watch list of probably 10 to 15 markets. And I produced a pretty good YouTube video on it, on why I follow so many markets. And we talked about it yesterday as well,
Yeah.
with the intermarket analysis thing. When you're following so many different assets, you have much more opportunity, right? But there's more room for error if you're unskilled. But when you are following more markets, now you can filter out markets that are slow. Okay. And I think the biggest run for me was, and when I do the best, is when I go into the market that looks ready to move.
Yeah.
I'm not trying to trade slow markets. So that's part of my nightly routine. So I prep that, and I'll flag the names and assets that I'm trying to trade the next day. And it's only going to be 1 to 2. I'm not trying to flag 5 different markets and try and follow 5 markets the following day.
Yeah.
So I look at a big watch list, a basket of assets, and then I dial it in to 1 to 2 markets that I want to trade the next day. And then in the morning, it's really just running through my process, my strategy. If I'm trying to go long, again, I'm trying to buy it below the open. So I want to see it trade lower first, maybe induce sellers, maybe take out liquidity, market structure shift higher, and maybe displacement, fair value gap, enter a long position below the midnight open, and just manage my risk appropriately, expecting that the daily candle is going to close higher. And then once I'm in the trade, though, I can't do anything else. Like I'm no longer in control of the trade. The only thing I can control is the stop loss and my exit. So my exit, it's either going to go to my target or I'm going to discretionarily close. And I usually don't discretionarily close in a loss. Usually when I have the risk on, I'm assuming that I'm going to take a loss. So every trade that I put on, and Gene mentioned it on Twitter, I don't know if a lot of people do this, but before I even put the trade on, I just assume that money's already left my account in the form of an expense. So if you're running a proper business, you have expenses, you may buy inventory. You don't know when you're going to profit off of the inventory. So if I'm running a retail store and I buy 10 laptops, I don't know when I'm going to be able to sell the 10 laptops. And that's the same mindset you have to have in the markets.
But the money goes out anyway.
Yeah, the money goes, it might take 15 minutes to go towards your target. It might take 3 hours or 4 hours. There's some trades where I'm just sitting there watching paint dry, essentially. But in the meantime, I'm trying to be productive in other ways. I might be watching your podcast. I might be looking into other, trading material. Maybe I'm looking at news, or maybe I'm just kind of watching stuff on YouTube to pass the time.
Yeah.
But in the meantime, I really am not doing anything. And I think a lot of traders need to understand that proper trading and P&L, green P&L, comes from not making so many decisions. So if I had to break down the amount of actions I take it's probably only 2 or 3. So I enter the trade, maybe I manage the stop loss, maybe I add, and then I exit. Right? If you constantly have a trade idea, now you're in, out, moving a stop loss 10 different times. Yeah. Now all of a sudden you're micromanaging the trade, and it hurts your P&L.
But that process you mentioned is so important to that, to be able to stick to that and be more calm with following that. Because
when you're in it and you have risk floating around, you're very uncomfortable, and that's the meditation thing. You have to be comfortable with that uncomfortability. Like sitting still with your mind and your own thoughts is extremely uncomfortable, and that's probably the biggest challenge that a lot of traders are facing.
How much does fundamentals come into your trading? As in, like, is that something you're tracking? Is it something that you are using as part of the strategy, or is it more so technical based, and you understand that the fundamentals obviously has a play in the volatility? Yeah,
so it's a bit of a hybrid. I would say it plays like a 20 to 30% importance in my trading, because I'm trying to intraday trade inside of a global macro trend. So if I'd see something going on in the world that's affecting a market, and it's going to affect a market for the next 3 to 6 to 9 months, maybe even a year, then I'm trying to trade inside of that quarterly cycle. But I'm still, I'm trying to get flat intraday basically. So I mean, I'm taking advantage of the long-term trend, but again, I'm trying to take advantage of just the intraday volatility within that long-term trend,
Definitely.
obviously.
You're gonna love next week's episode with Mr. John Netto. He wrote a book called Global Macro Edge.
Okay, I have to pick it up.
Yeah. It's like this big.
Yeah.
I'm not joking. It's
I might have
massive.
to audiobook it then.
It's huge. Great guy though. You'll see like his energy is amazing. But that is exactly what he said as well. In terms, well, his whole edge was focusing on when the global sort of macro edge is in play, and really sizing into those positions. He did a phenomenal return. I think he took. He had a minute for 6 years. I think he made like 40% every year, or more. Sorry, but a large amount, but with just a 15% drawdown each year.
Wow.
As a max drawdown over the period of time, which is incredible. But to go back to what we were talking about, in terms of multi-asset analysis, it's interesting what you said. Like, you'll have like a 10 to 15 basket, focus on what is looking to move and has opportunity now, and then even let's say if that's 5, you then focus on the best 2 to what your sort of opinion is on that. Do you feel like traders who are only trading 1 to 2 pairs are kind of capping themselves? And as you said, it is a bit more advanced, to be looking at that many markets. But would you say they're kind of capping their potential? Because if they're, let's say, just on EU and GU, very correlated as well, have a lot of choppiness, right? And you really only see some volatility and trends coming in when there's some sort of global macro edge taking place. Do you feel like a lot more traders, once they've built the skill set, should be sort of broadening their horizon when it comes to markets?
Yeah, I believe so. Because the thing with multi-asset analysis is it'll tell you when markets are a bit out of sync and uncorrelated. So when I'm expecting the dollar to go higher or lower, typically I'm expecting all the foreign currencies to, move in a specific direction. So if the dollar is going higher, I'll see euro, pound, Aussie dollar, New Zealand dollar, all moving lower. And a lot of times when those markets are not moving the way they should be moving, I typically identify those as low probability. So, when bonds are doing a specific thing, yields are doing a specific thing, but the market's not in agreement, those are conditions that I typically sit out on because it doesn't make sense to me. And when those conditions, when it doesn't make sense, I lose the most money. So I think it's very important to eventually work your way to that level of understanding multi-asset and intramarket analysis, because it helps you avoid a lot of the drawdown periods that you might be experiencing. Because a lot of traders, they cannot identify what is a high probability versus a low probability condition. They just assume that if I show up to the charts today, it's going to be a high probability condition, right?
We wish that would be the case. Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, Alpha Prime, the first of its kind in the industry. Now, evaluation firms have been in the industry for the last few years and done absolutely phenomenal in terms of its impact for traders. As you can see here, through Alpha Capital and Futures, so many payouts to so many traders across the world. But now, for the first time, there is an incredible route for traders to become professionals and to trade live capital and Alpha Prime. So let me quickly tell you how it works. You could just buy a challenge on Alpha Capital or Alpha Futures. Doesn't matter which one. So Alpha Capital, you have phase 1, phase 2, phase 3 challenges. On Alpha Futures, you have standard and advanced plans. Whichever one, purchase a challenge. Show consistency, build your track record, and then you can be invited to Alpha Prime. Alpha Prime, you will get access to live capital. You will get access to risk management and resources at a professional level. You will have a salary as a trader and access to trade on live trading floors starting here in London. This is the first of its kind, where an evaluation firm is finding talented traders and then backing them with live capital and creating a route to professional trading. I am very proud to be sponsored by Alpha Prime. The links for both in the description below. Alpha Capital and Alpha Futures. Use the code RIZ for 20% off all challenges. Link is in the description below. Now let's get back to the episode. What was the process like for you in terms of when you started to sort of dive deeper into these multi-assets, especially like the bonds and yields, for example? Because I can imagine people hearing that at home probably feel a bit overwhelmed or think like that's going to be super complex.
Yeah.
What was that process like for you? Was it complex? Were there certain hurdles that you had to overcome?
I try to simplify everything. So with the yields, you just have to understand that investors are trying to seek yield. So if the yield's going higher, you're typically expecting maybe the stock market to either be flat or go lower. And usually, it's very simple. You can just kind of track both markets and go back through time. Like when yields are rising, usually we don't have a massive rally in stocks and equities. So it was a learning process, obviously. Like you have to study it for years and years because you can't just back test it and say, I've got all this experience. The problem is you have to follow the Fed and understand what the Fed's doing with the rates and actually be there in person, seeing how these markets are reacting. And that's the part that people really can't shortcut. I think everybody thinks that they can come into the markets and trade 3 months and then figure it out, 3 to 6 months and figure it out. But the problem is that you're only possibly trading in one market cycle. So everybody in a bull market, they're in there for 3 to 6 months. They're killing it. And then the market conditions change and then now they can't adapt. And they think they just continue using that same process and mindset. And then they end up giving back everything that they've gained in that bull run.
Do you feel like if you were to be realistic or your advice, sorry, to a trader out there, like how long should a process take, Because I think a lot of traders come into the space and they still have that mindset of like a year or 2 years is long enough, right? That's plenty of time. What would your assumption be or your thoughts be in terms of, someone coming into the space? More than likely someone at home right now has been trading 6 months, maybe a year, maybe 2 years, and they're probably frustrated that they haven't got results. Like what would you tell them?
I think it's first of all, they have to figure out what their expectations of the markets is going to be. Because I think everybody comes into the markets and wants to be Linda Rasch. They want to be Jason Shapiro.
Yeah.
But you have to realize that those people have been trading markets for decades, and it takes a long time to get to that level. It doesn't just happen in 1 to 2 years. And the thing is, there's so much information that you will pick up and learn to get to that level. Like, yes, you can learn a mechanical strategy and do quite well, but you're never going to be like a legendary trader if you have all these other holes in your systems and processes and your knowledge. So I'm always trying to educate myself more and more about the markets. I don't know the most about fundamentals. I'm sure if I beefed up the knowledge of my fundamentals that my trading would improve. And that takes a long time. And you have to treat all these different skills as like different branches of a company, essentially. So when you're first getting into trading, you're focused on technicals. But what technicals, right? If you go through all these different technicals, you're not really going to know one technical indicator in 3 months. It's just not possible. And how are you expected to learn 2 of them? So if you're only studying, a fair value gap, or if you're only studying Bollinger Bands, I know Linda Rasch, I believe, uses Bollinger Bands a lot. If you only study Bollinger Bands, you have to study them for more than a year, I think, to actually be an expert with them. And I think over time, I've added a lot to my toolbox, but every single one of those concepts have taken me years and years to try and dial in and figure it out.
I think it's important for people to recognize that. And the first thing you said was so important in terms of understand your expectation, understand what you're expecting from the markets and from your journey. And as you said, I think a lot of people try to compare themselves probably to you, to Linda, to Jason, or even if they're not comparing to others, they still have the goal of being an 8-9 figure trader. And there's nothing wrong with having the goal. But as you said, understand what that expectation looks like. And I think that's the missing piece.
And the way that you do that to get level is by focused study, because you don't want to burn out. If you try and learn everything, you're going to burn out like I did, because I went through those periods. I was trying to learn everything. I was trying to learn macro, technical, risk management, all at the same time, and I just burnt myself out. So every time I left, I would come back with more clarity and just focus on a couple of different aspects and just really focus on things that I was the weakest at. So if I was really bad at risk, that was really the only thing that I would focus on for an extended period of time. So, even if it's just for a month, say a month, I'm not going to break my risk management rules. If you do, then you still have to continue focusing on that, right? And it's just about focused building of those skills. And I love that. I believe I was watching a podcast with Derrick Rose. He used to play for the Bulls, and he talked about how Kobe would train each season. When he came into the league, he was raw talent. So each year, he just focused on a couple different things. So the first year, I believe he focused on like jump shots during that off season. The next off season, he was focusing on footwork, and he would like dial in and only focus on those skills because that's how you master them. It's not just piling them all together and trying
Yeah.
to perfect all of them all at
Trying to do
once.
footwork, shooting, passing,
Yeah.
drilling all at once.
They are doing that, but it's more of a focused effort for a couple hours a day on those
Yeah,
specific
so like he
skills.
would from I'm not obviously big into sort of like the basketball space or sports in general, but from what I've heard and seen interviews of, is that he would like, you know, turn up to practice alone 3-4 hours
Mhm.
before a game, for example. You know, and that's the difference. You know?
Mhm.
And it's the same with trading. Like the difference with, let's say, that example and a lot of other examples that would be similar is that there's a lot of teamwork and other people involved with that journey. Trading, I feel like the problem comes is that you're alone
Mhm.
and there's no accountability. There's no one watching you. There's no one to say, hey, have you done this today? You have to do that.
Yeah, you have to want it enough.
Yeah. Yeah. What would you say was like a pivotal moment that created change for you? Because you've been very, shared your journey and you've always been very transparent in terms of like, I struggled for this amount of time and these were the things that were going wrong. But what was the one thing, if it stands out to you, that really made you like a quantum leap?
So to me, it was like a bit of a tragedy. I think the biggest change for me was trying to disconnect from the money aspect of it, and the two events that happened in my life that made me put more focus on time than money was losing my parents to cancer. So when that happened, I really didn't care about money anymore. I would have given all the money that I have right now to spend more time with them. And I think when I was able to disconnect from the money, and I've had discussions with senior traders before, I think a lot of people, they might never get to the point where they disassociate with money, and that's it's an advantage and a disadvantage at the same time because as you size up with trading, sometimes you disrespect the money,
Yeah.
and that's part of risk management. It's part of growing as a person and managing your money, and I don't think there's really a good way of really overcoming it. I think you just either are gonna figure it out or you're not. Some people just never they can never disassociate with money. So whenever they have risk on, there's just different types of people. You have to be okay with the risk. Some people are risk averse and are profitable in the markets, and some people are a little bit more aggressive. But you have to disconnect from the outcome of every trade because if you take a loss and now all of a sudden you're angry, you're going on tilts, you're not even realizing it because you're so focused on the money that you just lost. To me, I just didn't really care about the money anymore. I just started caring more about my time because when I picked up a new career after my father had passed away, and just recognized that I had less and less time to spend with my wife, to spend with my friends, to spend with myself. Like I didn't even when I got home, I didn't even have time to have dinner, let
Mm.
alone work out or do anything that's really healthy and would boost my mental health. Like so, my mental health started deteriorating, and they were paying me great money, and I just realized like money is really not the answer to your problems, and I kind of